Hello traders, Gary Wagner here, just about 10:45 in Honolulu, 3:45 in New York. It is Monday, President's Day, the 15th day of February 2016, and this is the Daily Report for Gold and Silver. Although precious metals markets are closed currently, they certainly had a heck of a move yesterday, Sunday here in Honolulu, as well as the mainland, of course, overseas, trading in Hong Kong, Australia, and London. And boy, did they hammer the metal. I think they hammered it to a overdone degree, but we'll talk about that in a second. Also try to make sense out of the most recent move that we've seen. But first, to our current trade. We are effectively stopped out of our current trade. We did enter the trade in two legs. I'll only cover this last leg. We entered the market on average at 11.17, trailed our stops up consistently. We trailed our stops to just below 12.30, and this was back on Friday or Thursday of last week. And then, of course, as the markets came down, it did knock us out at about 12.29. So in terms of a profit on the trade, it is plus $100 per contract, or $10,000 per contract, roughly 100% return. Add to that the first leg that we entered, and it was a tremendous profit indeed, depending on how many contracts you had, but nonetheless about 100% return on that trade. I think it was one of our better trades over the last couple of years. We had some real movement in the market, and we were able to capitalize on it. Now, from there, the real question is, well, what now? And where can we expect really the marketplace to go? And to do that, I have created a basic chart. And on this chart, this is the first one that I want to look at. On this chart, what I've done is fairly simple. I'm taking a look, in essence, let me get my pointer here, but in essence, at the moves that we have seen in this market from these lows down at about 10.45 up to this first peak, and this first peak came at around 11.10 or 11.11. Then it corrected, and it corrected in essence 61%. We talked about that on Friday. So what I've then done is created an extension of this move here, and then began the extension right at the lows of these candles. And here's what's interesting. Typically on a large move, you will see this market go 161% that of what we saw on this first wave. We'll call this wave 1, wave 2, and this being wave 3. In extreme cases, you will get the market going to 261. And if we look at 1247, that is a 261% extension of this move right here. In other words, from the move of 1045 up to roughly 1110. And so from there, you get a 261% extension, considerable, and that is really where we saw this market close at. Of course, it did go higher, trading as high as I believe about 63, and then of course we saw the market correct a little bit on Friday. This is Friday's candle, and this of course would be Monday overseas. Of course, we're closed right now, then that's why you see the market stagnant at this point. Now, the real key is that was this particular move overdone, or will we see some settlement? And where is current price, meaning 1209, fit into the big picture? And for that, we need to look at another chart. So traders, as you can see, I have pulled up a chart. This is basically a weekly chart. In fact, let's go ahead and convert it to a daily, although the numbers won't make any difference. But what it will do is give us a few extra data points to work with. And in terms of looking for a particular point in which we could find some sort of support in the market, I have basically two fib retracements. Let me go ahead and compress this so you can ascertain where both are coming from. It was easy to see in the weekly, of course, but our top Fibonacci retracement is going to really peak out at 1306. It begins at about 1045, so it's our longest of the two fib retracements going from this entire move. When we do that, we get a couple of key numbers, and these are the numbers we've been looking at. 1244, that is a 23% retracement of this move. And then the next one would be, of course, a 38% retracement. That comes in at around 1206. Now, when we consider the low that we got today, which I believe was about 1202, if memory serves me correct, it really appears as though the one area that we do want to look at that could provide really good support is going to be roughly $1,200. So that's what I'm pegging as our current level of support right now. Market's trading at 1209. Should the market continue under pressure and break below 1200, you have a couple of points, key points that we would want to look at. One would be 1193.90, call it 1194, and then 1172 and 1181. Those are the areas that we would look at. These are the different key levels that we would look at. Obviously, we've pulled a tremendous profit on this particular trade. As I said, getting in roughly at 17 and getting out at, call it 29, so a real good profit, over $100 on the trade. We're going to let the dust settle, but we want to be very aware of where this market could go, because my sense is what we have seen here is a 1, a 2, a long protracted third wave takes us into our fourth wave. Let's assume that the fourth wave does find some sort of support here. Our fifth wave actually, I believe, should come in. And since there's no real tops in this area that we haven't already breached, because we've breached all of these tops, taken them out here and here and here, the next real top to kind of conquer is that $1,300 top. So my sense is wherever we find our level of support come in, we will go into, I believe, one final fifth wave before going into some sort of an ABC. And by the way, all of this 1, 2, 3, 4, 5 is going to be part and part. It's a subcount that will be part and parcel of an intermediate one. In other words, this entire move up from, call it 1040 to 1300, this will be a wave one. And then our A, B, or excuse me, this is 5. So our A, B, and C would then be a wave 2, an intermediate wave 2. So traders, we had a really good trade. We'll have to see how the dust settles. But as I said, in terms of areas of support, look at 1206, 1193, and below that 1181. Although I don't believe that we will see the market go that low, we certainly have seen some extreme volatility, and anything can happen in this market. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.